Most people think trading is about charts, indicators, strategies. But here's the truth. Two people can trade the same setup, on the same chart, with the same capital, and one makes money. The other blows the account. Why? Because trading is not a technical game. It's a psychological one. Today I'm going to break down why most traders fail, what separates consistent traders from emotional gamblers, and how you can start thinking like the top 5% without complicated strategies. If you're serious about trading, this video might change how you see the market forever. The biggest lie new traders believe is this: if I just find the perfect strategy, I'll be profitable. So they jump from strategy to strategy. New indicators, new time frames, new mentors. But profitability doesn't come from more tools. It comes from better decisions. Professional traders don't look for certainty. They look for probability. And most people can't handle uncertainty. That's why they overtrade. That's why they revenge trade. That's why they ignore stop losses. The market doesn't punish bad strategies. It punishes undisciplined behavior. Let's be honest. Fear and greed control most traders. Fear makes you exit winning trades too early, miss good setups, hesitate when it matters. Greed makes you increase lot size randomly, hold losers too long, break your own rules. And the worst part? You don't even notice it happening. You tell yourself, just this one time, I'll manage it manually. It will come back. But the market doesn't care about hope. Consistent traders don't trade how they feel. They trade how they planned. Amateur traders focus on winning trades, being right, big profits fast. Professional traders focus on risk management, consistency, process over outcome. A pro trader is okay with losing trades because they know losses are part of the business. They don't panic after a loss. They don't celebrate after a win. They stay neutral because neutrality is power. Once you stop needing to be right, you start becoming profitable. You can be wrong 50% of the time and still make money, but only if you manage risk properly. Most traders risk too much. One bad trade turns into overthinking, emotional decisions, account destruction. Smart traders think in percentages, not money. They protect capital first. Profits come second, because without capital, there is no trading. Survive first, grow later. Here's something nobody likes to hear. Trading is boring when done correctly. Same setups, same rules, same risk, day after day. And most people quit because it's not exciting enough. But consistency is what builds confidence. Confidence builds discipline. Discipline builds profitability. You don't need to trade every day. You don't need to catch every move. You only need to execute your edge again and again. Trading is not gambling. It's not entertainment. It's not a shortcut to wealth. It's a business. And every business has expenses, losses, revenue, wins, rules, systems. Once you treat trading like a business, your mindset shifts. You stop chasing. You stop forcing trades. You start waiting, and patience pays more than impulse ever will. If you're struggling right now, it doesn't mean you're bad at trading. It means you're still learning discipline. The market rewards those who stay calm under pressure, respect risk, trust their process. Not overnight, not quickly, but consistently. Master yourself, and the profits will follow. If this video helped you think differently about trading, hit the like button, subscribe for more real trading psychology, and remember, the market tests patience before it rewards skill.